Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you guys are loving this volatility. What a week, huh? So, with this video, I want to keep things rolling here with these earnings on the radar videos. I feel like it's a good way to get everybody in that forward-thinking mindset, and it's kind of like a great start or kind of like a kickstart to get everybody game planning for key upcoming names. And even though earnings season technically got going this week, it'll really start to jump into high gear next week, really start to pick up a lot of big names. So the next couple of weeks will be super, super busy. So instead of rambling on here, let's just jump right into it. Monday morning, you have the other mega cap bank, Bank of America. So JP, Citi, Wells all had what seemed like relatively solid results on Friday, right? But kind of mixed action, not really great. JP off, Citi dancing around slightly higher, acting a little bit better. Wells Fargo, same thing, dancing around a little bit higher. So decent earnings, but not great action. Bank of America on Monday, you would you would think that most of the negativity would be close to priced in. Uh, Whereas because it's such a high correlation with J.P. Morgan, some of the sell the news could be have played out on Friday in Bank of America, especially considering it's down 3 days in a row, right? Three sharp down days in a row. I mean these banks have really struggled in an environment that should be overall positive for them, but to 3 down days in a row, Bank of America. Maybe you're looking for a snapback in this one. Regardless, the weekly straddle for next week is still priced in about 1.25 points, so 1.25. So definitely expect some more action there. Calls are so like the XLF strangle is kind of like a hedge for like the Bank of America and Citi. So if you're wondering, I mean that's going to continue to that strangle will remain open at least through Bank of America and possibly Goldman and Morgan, which I guess we should jump into now. So Tuesday morning, you have some more financials: Goldman, Morgan, and also the biggest asset manager, BlackRock. So that XLF strangle will stay open through these guys as well. But basically, we try to avoid like the third or fourth or even fifth name to report in the sector that's that are kind of like similar businesses. And this basically the issue with Goldman and Morgan is at the point that they end up reporting on Tuesday, whether you kind of have to figure out whether news is already priced in and whether most of the risk at that point is to the downside, right? So if Bank of America, JP, Citi, Wells all beat and have lousy action, then if Morgan Stanley and Goldman actually miss, you figure that most of the risk would probably be to the downside at that point. So just kind of like a general rule of thumb for us, tend to avoid the third, fourth, fifth name reporting in a similar sector or segment. Um, BlackRock probably won't be involved with. Pretty tough week for BlackRock, but it's not a great name. It doesn't move very consistent when it reports, so probably just leave that one alone. But it's interesting just because it is the largest asset manager. That's also on Tuesday morning. Uh, Also, UNH. So biggest healthcare provider. Stock has been a beast. Just fantastic action. Just really nice trendy name. Um, it it's shrugged off. This is back when some Amazon headlines about getting into. It was when Amazon teamed up with Berkshire and JP to get into healthcare, but similar to a lot of other stuff that's been Amazon, it's really just responded nicely. Uh, so this one, it's been a pretty consistent performer on earnings. The numbers have been solid. Not it doesn't always respond positively, but it does respond, so it moves. And what's interesting about this is that it's pulled back to the 100-day, which is a nice level for it. It's one of the top weights in the XLV, which has been acting great. Uh, the weekly straddle is pricing at about 11 points, but this might be one with kind of bullish biased on. So might look for a bull setup on this, just because the numbers have been good, the stock action has been good, and it's given it a nice opportunity to try some in the hole. So like a late dip right ahead of earnings, so you can get some in the hole. So maybe look at a bull bet, but because it's pricing in a lot, 11 points, maybe a spread might be the smarter way to play it. Kind of manage your risk better there. And then also J&J before the open on Monday as well, or excuse me, before the open on Tuesday. This one's a little bit less consistent. It doesn't always really respond positively to earnings. It's gotten hit also, but it's just not a really consistent name when it comes to reporting. So while it's the biggest pharma name, and it is also a big weight in XLV, probably one that we'll just avoid. And if it looks good after, we could always hop in, right? If it has like a decent setup. After the close Tuesday, CSX. So this one was a really nice setup for a run into the report, but that was basically until the market fell apart this week, right? So it was coming off. Part of the appeal was coming off a nice quarter. You can see here, nice quarter, and then a really strong run. Nice little tight base, started to tick higher, and it looked like it was going to take off. Because moving averages were kind of clustering here and starting to turn higher, provide a nice upward pressure. But also B, because Canadian Pacific, another rail, had gave preliminary guidance recently that was really strong. So it seemed like it would bode well for CSX and some of the other rails, but I mean this kind of got swept up in the overall selling. Still bullish biased on this one, but may have to roll down the position to something closer to the money, just because at this point the 80 strike call is pretty far out of the money. So maybe like roll down something in shorter time frame, closer to the money. That's the thinking at this point. IBM also on Tuesday. So this is one we've. This is one that just trade was just open and closed, and then there was another trade that proposed, but they kind of removed it. It was going to be a calendar call spread around the earnings date, but they confirmed basically the day that the trade went out. So that was never opened. But long story short, it's an interesting name for trade, but depending on where it is ahead of earnings. So with this volatility, you could still see like a few dollars either way. Really, the stock mostly ends up trading lower in earnings, so it's kind of tough to be bullish. But it did seem that the way it was setting up into the quarter, it kind of lent itself that way. But obviously, after the last 2 weeks, it's a little bit different story. So that's why I said kind of depends on where it is. This huge move has really taken away some of like that bullish setup that was developing. You can see it was acting nice, holding above 200-day, had a really obvious gap here, but now it's a completely different stock, and it's going to go in like at a really critical area of support. So depending on where it is, we'll take a look. Don't have a definitive trade in mind at the moment though. Netflix is the big one. This is the big boy after hours Tuesday. So, you could say this about a lot of names, but looked really great a couple weeks ago, right? Looked like it was about ready to take off into this gap. It was flagging right at resistance, gap resistance, had a really obvious move to 400, but just, really dropped sharply after that. Bounced at the 200-day down here. So this is a great candidate for a bounce back quarter. It really was just on an incredible streak of just blowout numbers, fantastic stock performance, and then July they slipped up. So missed across the board. Stock got punished and had a really sharp drop. So typically when you have a stock that's just killing it and then slips up, you want to buy into it or you want to try a bullish bet to see if they rebound. So like a rebound quarter should lead to a rebound in the stock. Typically, that's how it works out. So with Netflix, definitely bullish biased on this. And like the interesting thing is, obviously, it's had a tough couple weeks, but I mean, there's still a really obvious gap here to 400, right? So if it gets through 380 again, I mean, there's a really clear gap to 400. And looking at the options, they're not too expensive. They're pricing about 38 points, which, I mean, you say not too expensive, about 10%. But considering last quarter it moved 55 to 60, that's only two-thirds to, 50% to two-thirds of what it moved last quarter. So it's really not expensive in context of what it did last quarter. And, when you kind of combine the technical setup with a clear gap, it seems kind of an interesting risk reward, and something that probably bull biased. I mean, right now there's a call fly that's open, which has 400 is basically the target of that call fly, the way it was set up. So that's still open, and I mean, if positive and the stock rebounds, I mean, 400 would be like the really clear target here, just because it's such an obvious gap. Wednesday morning is ASML, so this will be another chance for the struggling semis and semi-equipment names to kind of turn things around. But really, this has been a really tough bunch to bet on. It just the numbers have been okay. Guidance has been probably the issue. A lot of analysts have turned negative on these stocks really quickly, and ASML is coming off a good quarter, but it's trading near its 52-week low, which is kind of a tough position to be in. And even worse, it seems like if it's not great and it breaks down here, I mean, there's a lot of room lower. So, this is the issue. Like, these things are cheap, but they just keep getting cheaper because the price action is so bad. Leaning towards not touching it, but maybe if something compelling, see some compelling like options come in on it, or could be one of those where you play like a sympathy trade. I mean, some of the names that trade with it are like LRCX, AMAT, CLAC, like those types of names will tend to move with ASML. URI, after the close Wednesday, so probably maybe not a household name, but one it's going to be on traders' radar on Wednesday. So this is it's going to be another industrial report, and there's been a couple of really rough guides out of industrials so far this quarter. So this is going to be key, and how this goes, how URI goes, and obviously you can see the stock doesn't look particularly great at the moment, but how this goes could influence other names, say like Caterpillar, so other machinery names like Cat, Deere, Ingersoll Rand. This one, they're pricing about 12 points, which seems kind of steep because the volatility has been a little bit more muted on this for earnings recently. Last quarter, I'll show you. Last quarter, not much action here. It's about $5 move, 5 to 6 point move. So 12 points. Yes, the stock has been moving around a little bit more the last 2 weeks, but overall, volatility has been contracting a little bit on earnings. So, while it may be interesting in how it affects other stocks, at 12 points, it seems like it might be a little bit too expensive to actually try a trade on, one way or the other. Thursday morning, you have a bunch of names, but not anything that's terribly too interesting. Snap-on, one maybe a bearish bet candidate. So this is a tool supplier, another industrial. See it double topped up right off like January, February highs and started to roll over. Some of its peers are trading at 52-week lows, so like SWK trading at 52-week low, and ITW, which just had a trade on, that's trading near its 52-week low as well. So, the group isn't acting great. This just double topped up at above 180, 185 area, and the industrials are under some pressure, so maybe a bearish bet candidate on that one. After the close Thursday, you got some potential movers. So ISRG, dollar wise, will probably end up being your biggest point mover. This one's been under pressure, but could be a solid snapback candidate too. It's had really great earnings, just blowout numbers. The procedure guidance kind of key with this one, and that's been really strong. Stock has been in a great trend. You can see, I mean, it hasn't really had many extended dips. The 100-day has been a really big area of support underneath, which it hit again. So, numbers have been good. Stock action's been good, holding key level. If earnings are good on Thursday, maybe you see like a quick snapback to retest like this recent high up to like 575, 580 in that ballpark. PayPal. Tough one, huh? Brutal October. I mean, this thing really just gotten absolutely killed. About a 20% drop off this mid-September level. So the thing with PayPal is that it's currently hanging around a pretty big area underneath. I mean, you can say this about a lot of stocks, but you can see that pretty significant area of support for the last like year and a half down here. So it's going to kind of depend where it is around earnings, but this one seems like an interesting volatility candidate. So like a straddle or a strangle, something like that. I think the logic behind it is that a miss, so a kind of a weak quarter, maybe puts pressure, and you could really see like a substantial break of like the support area, right? Or if it's good, you could see like a pretty sharp snapback to get back, up into like the high 80s and reset above some of these moving averages that had been significant recently. So, Thursday with this type of volatility is a long ways away, but one that we have circled on our radar at the moment, just because the chart is interesting, and the options aren't too bad. They're pricing in about 5. The weekly straddle for next week's about 5.5 points. So, it does seem as though that there could be visibility for a bigger move, especially if it's at like 75, maybe you see like 10 points versus 75. Maybe you see like a move down into like the high 60s if it's negative and breaks the support area. All right, Skechers is another one. After the close Thursday, so this thing got absolutely eviscerated in April, again in July. There was a trade on this recently that was looking for a retest of the low, and it kind of got down to 25 a few times and paused. It's still hanging around this low, this 25 area. So it's moved about 10 points the last 2 quarters on average. I mean, really, if you want to go back, it's moved about 10 points the last 3 quarters on average. Down here, it's kind of tough to expect another 10-point move. I mean, that would be a 40% move on a $25 stock. So that's a little aggressive. Right now, the options are pricing in 375. So while 10 might be tough, 375 seems like it could leave some room open for maybe money either way, right? So pretty obvious level above 30. So that's about 5 points from 25. And then underneath, you can see it's kind of hovering above key support also. So, if it's another, back to back misses, I mean, maybe you're looking at a move into the low 20s. So with the straddle at 375, maybe this could be another decent volatility candidate, right? Like a straddle or strangle. There's visibility for $5, maybe more higher, or $5 down to like the 20 area. So at 375, leave some room there, some meat on the bone. All right, Friday morning, Honeywell. This is a big industrial, first aerospace name. It's coming off a solid quarter, and the stock was really acting great just up until the last like 2 weeks. They guided mid-quarter though, so usually when there's like preliminary guidance, takes away some of the uncertainty, aka takes away some of the volatility around earnings. Uh, we didn't play this one in August, but it really had a nice follow through after beating. So like right here, had a nice follow through, and then another extended move higher. So going into this quarter, may look to approach it the same way, like wait and see mode. So if it nice bounce back, if it has a decent quarter and a nice bounce back, reestablishes some momentum, then maybe look at a bull bet to try to capitalize on a break above 165, which has kind of been like the top. It's stalled around 165 twice now this year. So maybe kind of approach it from the same way we did in July, where hold out on earnings, and if it's good and the stock acts good, then maybe look for a bullish like long term swing. Schlumberger is another one Friday morning. So this is the first. This will be the first really key energy report. Uh, it's kind of a broken record after this week, but I mean, Schlumberger, like many other stocks, was acting really solid just up until the past few days. Just coming off the 60 support and starting to work higher. Was working at 50-day, but now it's kind of hanging out below 60. And 60 is a really, really, really critical. And you can even go back even further. So it's a really critical area of support. You can see going all the way back. So if it continues to hang out under here, going into earnings, probably thinking about picking up like a put hedge. It's probably the smart way to handle it, just in case it's if in case it gets ugly and it really starts to break down. I mean, there's some serious room lower here. The open position is a calendar call spread, and that basically was targeting a retest of the 65 level after October expiration, so after next week expiration. So you can see 65 is like the real obvious like area of interest up here. Basically where it broke down. It broke down and has sank down, and so we're looking for like a retest of that. I mean, unless it has a very dramatic run next week, it seems like the short October 1965 call should be okay. The weekly straddle is priced in about a 2.75 point move, so it would almost double up that expected move if it were to hit 65. The long portion of that spread is out through January, so if it doesn't have a big move, that's fine. If it has a material breakdown, that would really probably ruin the prospect of the calendar call spread. So a put hedge might be the smartest way to go about this. Just it could even be like a short term put hedge, just to kind of cover some downside exposure if it turns ugly, right? All right, so that's what's on the radar for next week. It's gonna really start getting busy, so get excited, right? I hope you guys have a fantastic weekend. Lots to look forward to next week, so rest up, relax, and I'll talk to you guys all on Monday.